Hello, everybody, and welcome to the Plus Three Futures and Commodities Show. We are recording here on Friday, the 21st of November, about 40 minutes after the close. My name's Ben Maldonado. As always, I'm here with my partner, Barry Hederachi. Barry, how we doing?
Doing great, doing great. Ready for Thanksgiving, I
Yeah, as
have to
we're
say.
heading, we're heading into Thanksgiving week. So the big question, I think, after the last few weeks is the coming week and first week of December, is it going to be feast or famine? What are we going to get here?
A good question.
So let's dive into it. I see the S&P here. We had notable weakness this past week, and it looks like we came right into support.
So last week I mean, if you guys go back and check the tapes, check the videos, the last 2 to 3 weeks, we spent a lot of time on the indices. We spent a lot of time on the logic of where we think things are going and why. And if you follow through, you'll see, it all sort of panned out because we've been looking at how support is getting taken out and how we're making lower lows and lower highs. Same thing are showing up on lower time frames, obviously, like the 4 hour we've been working with. It's all starting to show why it was important to spend the time talking about these things because then we can be open to how it's going to play out. All right. So that being said, last week, one of the big themes was markets were, each market, we had about a couple of indices doing different things, right? We had the Dow doing one thing, we had the NASDAQ doing the opposite, then we had the S&P sort of sitting in the middle. And the middle in this case was this 66.38 level. We left off talking about how, it's just sitting there. If we take the low out, obvious that we're gonna get weaker and start slipping lower. And to the upside, if we held this, then we could probably consolidate and move a little higher. This is what we talked about last week, right? And we talked about this 27, 67, 27, if we can get above that, whatnot, and how that's resistant. Okay. That was the story. And you can see how we really couldn't hold it. Monday, we were a little bit weak, weak in the knees. We made a lower low. And from then on, we got a little bit weaker. Then we had the big old, big drama on Thursday. And after that, we came back and made a new low on Friday. If you look at, if you ignore the drama, basically we've been making lower lows for the week. Isn't that right, Ben? Lower low,
100%.
all right? I mean, and lower lows are a measure of a downtrend, no matter how you look at it.
Yep.
Yes, it was chaotic, but when we look at the 30-minute and the 4 hour, you'll see how, while it would seem chaotic, if you were really sort of framing and looking at the levels on the lower time frames, it was okay. It all sort of held together, let's just say. All right, so going into a short week, next week, obviously the big key level we have to really hold is not too far. I would say it's around 66.40, 66.42. Now we have 38 here for support. We have about 68.42, which is the 50% line. And if we can get above that, we would have some hope of testing the 67.27 level. Now you can see from the close today, that's not exactly really close by. So I think it's a two-step process. We have to see if we can clear at 66, let's say 42, and which is the 50% level, and see if we can get on the other side of it. Kind of a tall order, which means we have to take out Friday's high and settle above this line. It's possible that we straddle it and, we might have a kind of a quiet week straddling that around 6,600, gathering around here, which is not exactly bullish. This is anytime we have price action settling below this 50% level is not exactly positive. And the thing that bothers me here is that, not bothers me, I should say things that the thing that weighs towards the bearish side is the fact that if you look, let me zoom in for a little bit, price action a little bit closer. If you look here, you can see how we basically held above the 50% level before, like let's say last week and prior. And then if you look at the four out of the 5 days, we're below the 50% level. And this looked, obviously this was some sort of a search and destroy to the upside, false break to the upside. You can say a flush to the upside before we went lower. So this one was no accident, the going up there and taking out that Friday's high. The once that was over, it was all downhill. And 4 out of the 5 days being below 50% doesn't really bode well. I'm not talking about just Thanksgiving. I'm talking, well, Ben, you're right. Going into the first week of December, this is not looking great. It looks definitely weaker than we've been in a long time. Definitely weaker than we were above the 50% level. And when I say that, it might not seem like it right at the moment, but we have to look at it over time, right? Now, before we said, well, if we can't hold above 27, 67, 27, it was here, the market's going to get weak. So if you really focus on that line, you can see how we have, what do we have to look at? We have 3 weeks to look at, and the rest of the candle body is below the line, right? So if you look at it right here, and right there, see that? And what happened? Well, the rest of the week, this week, we were stuck below that level. Well, pretty much the same deal, right? This is why we work with these levels, because they help you bracket it during the trading hours, well, bracketing for trading. Now that we're below the 50% level, we really need to be able to either, if we can't get above this right away, then I think market's in a little bit of trouble. And these lows are really important, because if we drop here, the next support is really, let's see, 64.61. Let's say 64.59. I have it on the board here a while back. Let's say 64.60 just to make it even. It's within a couple of points of 59, right? So that's the next big area if we can't really get above it, right? That this opens up the bottom half again to come back and look. And this is quarter of a square support level, and there's also some structural support here, maybe even a little lower. So I would say that's what's kind of open. If we can't really, take out today's high and settle above this 38 to 42, this level here. What do you think, Ben?
I think
That's kind of how I'm seeing this.
yeah, I think that's a good level to watch in the S&P, because it perfectly sort of splits where the edge is, right? You get above
Mm-hmm.
that, then it
Mm-hmm.
looks like it was just a stop hunt heading down, and if it stays below it, it means it's weak.
Means this top hunt up here was doing some
Yeah,
work for the
was
coming
more,
days,
it
right?
was pretty important, right? Yeah.
Yeah. So that's my take, and those are the levels for the cash. Let's go with that. Let's take a quick look at the futures market, and here pretty much played out. Let me zoom in. So we left this with this 66 level being support. See if we can hold that. It could get down to 61, about a 5 point, give or take 5 points here. And the idea was, we were holding just above it, and if we take out that low, we're in trouble. And sure enough, we took out that low, and we find ourselves right above this 65.09, 65.17 level. It's the next level to watch. 65.15 to 65.10. This is the next support level. Again, you can see between the two, you take out the premium, everything kind of lines up, the same pattern. And, the big thing here was, if you guys remember, this high squared out, and we called out, called it out in real time, saying, look, we have a square here, and to be very careful, and we have to hold a couple of levels, or if not, we need to get up above and settle above. Otherwise, we're going down for some kind of a correction, which we did. It ran back up. Here's a lower high we always talk about. Got that. We called that out, especially in the 4 hours. If you guys are following us on X, we post every day. The lower time frames, I post a 30-minute, 4 hour, and then you post a 60-minute, the dailies and all the other things in between. So if you're not following us, follow us there. Anyway, getting back. So we got that. That's what happens if you can follow us in real time. Somebody even commented, once a week is great, but it'll be really, really helpful. We can do a little video every day, but we post. So if you guys want to follow, we don't have time to do videos, but our next we make posts, and usually the posts are enough to hold everything through the day. And if you guys like our videos, please remember to like and subscribe and hit the alerts. That'll help us a lot. So getting back to the December D's contract, we are firmly stuck below the lows from last week. And we talked about structural support 2 weeks ago. We talked about, hey, if this breaks down, we really don't have a whole lot of support in between. We're going to probably get down into structural support levels. And I spent a little too much time that week, I think it was 2 weeks ago, about talking about what happens if we come down. And now you guys know why we did that. We forward pace sometimes a little too much. And at the time you're watching it, it might not look important, but you can see how over time it comes into play. So, I think it's best to probably just take notes and see how it plays out to make it useful, right? So you don't have to remember all the details. So anyway, getting back into structural support. So it's right around the 65.09 to 65.15, this level. Now that's, and we got close to it and we got down to 65.26, was it? 55.25? Yeah, 65.25, which was a level on the 30-minute. So we're good. We made the minimum, I don't know, minimum number. And that could be it, because that is kind of diving right into this structural support. I mean, if it was really, the market wasn't that weak, we should have held around, 65.60. 65.65 was a number that I was using in the on the 30-minute today. So that's really where the structural support should have stopped if the market was not as weak. So the weaker it is, the lower it's going to dig into the structural support levels. And you can see here, we really came down to basically the highs we had in July right there. And all right, is that enough for some kind of a change in trend and a balance and whatnot? It's possible, I think we got close enough to support to say, all right, are we going to see some kind of a counter trend, which we really haven't seen. I mean, the whole thing is, we had a 3-day counter trend for this entire move. Now think about that, right? This is from, towards the end of October. Now we're almost to Thanksgiving, and we only had 3-day correction on the way down. So this is it's a weak market. There's no two ways about it. And if that's a 1-2, and unless this is beyond an ABCD, but if that's a 1-2, then the third, the question is the third done, and this is get all the signs of a third leg, and that could qualify for a third, and that would mean Thanksgiving week could end up becoming some kind, because this is very clean too. We could do a complex 4 for the Thanksgiving week, and then either dip down into a fifth or maybe fail it and then rally. So we'll see how that plays out. But you guys can see how all that talk about the pattern and the everything else has to be grounded in these levels. So to the upside, we want to look at Friday's high. That's the easy way to remember it. We want to settle above Friday's high and then consolidate. However we manage to do that, we're better in firmer ground. Why do we say that? Because we already came down and tapped the key support level, not just 3/4 square on the template, but also structural support. So we have that, so we can settle above it. Okay, fine. We might have to come down a little bit to test it, but all in all, we want to be able to be above it. And generally speaking, below the 66 level, market is weak. Obvious. I mean, it seems obvious when I say it now, but it is. So trade accordingly. Anything you want to add to this, Ben? This is the D's contract. Pretty much the same story, right? Not much.
Yeah, same story. And
Same
that
story.
66 is the key number, right?
Yeah.
The key number to watch this coming week.
Exactly. And it was the key level, last week. So it's going to just be the flip side of it this week.
Exactly.
All right. So here is the continuation chart. Now, the reason we dip into a little bit of a lesson, I guess. The reason we use several different charts is to give us different perspectives, right? Because different charts will show you different things. Now, we talked about how the low came in, what I was kind of saying, 65.25 was sort of close enough, right? Made the minimum requirement on the D's contract. But here, if you look at the continuation, it was like perfect, right? Look at that. 65.17 is the 50% level. And you can see the continuation, like the structural support is right below the 50%. So, and you can see that this chunk is sitting right above it, right? We tested this almost down into this October 10th, came back down here late November. So, would that be enough? It could be, because what else do we have here? We have a false break against this low. So, pieces are kind of lined up, but what we really need some, well, evidence. So we can have plenty of opinions, but let's see some evidence. So the evidence will be, in this case, we want to be above, basis the continuation chart, 66.38. And if we can settle above that, and obviously if we can somehow get on top of today's high, we'll actually make it easier. And then based on this chart, 67.60 right there ends up being massive resistance. So, and the fact that, the way, if we look at how we squared out, I don't think we're quite done, but we have enough here to get some kind of a rally going. I mean, obviously, Ben, we talked about how, when the rubber band gets stretched, like a snapback could be hard. So I wouldn't be surprised if we can snap back into the 67.60 area, which is not a big deal. I mean, we did that Thursday, so it's not out of reach. But a test up here, I mean, that would be a nice move, obviously, from 6,500 level or close to 6,500, 6,525. So we could get that, but still, overall we're weak, and that's it. So the idea here is that, from the continuation perspective, we did hit on pretty good structural support and a level, which is 50% level. We're holding above it, and that could be enough for some kind of a second counter trend that we might get in this leg. First one was just 3 days right there, and this doesn't really call for any kind of a bull case just yet. We have to see how this next counter trend works out, if we get one. But it looks like, we have enough at the low to talk about one. All right, let's move to the NASDAQ. So last week, we talked a lot about the NASDAQ last 2 weeks, including, if you guys are watching it every week, we talked about the high when it came in. We talked about all the things were lined up. So this 25,140 was the level we were watching. Obviously, we just broke. We couldn't get on top of it, hold off. And I think I drew this in when we were talking last week, calling this kind of a support area, structural support. So if we can get down in here, 23,700 would be the next stop. Now we didn't quite get there. I mean, heck, we can get there Sunday night, Monday morning, so not too far. But the fact, as you can see, we got close, didn't tap it, doesn't mean we can't do it Monday, Tuesday, right? So I'm keeping that open. And you can see for the NASDAQ, the other market you saw, taking out Friday's high was enough, right? Because that would clear the square levels. And for whatever reason, NASDAQ, that's not going to be enough. Taking out Friday's high is not enough. So we're going to have to take out Thursday's high. And that's kind of a tall order at this point. And this is after all the, the video report, reporting and everything. Friday, we come and make a new low. All right. Guys think about that. And this is looking more and more like some kind of a stop grab more than anything else. So that's that. And I'm going to keep these on the board. Maybe we'll get down here and find support next week. Otherwise, long as we're below the 65,140, look, the NASDAQ's in trouble this week, and we could be trending for days. All right, so that's that. Let's take a quick look at the Dow.
Was the strongest of the indices.
Yes, that's right. So last week we talked about, I remember distinctly saying, hey, look, we can hold the trend line and get above 47, 160, 162. All right, we can consolidate and maybe run up for maybe like a third high, right? Like sort of like three drives, go up for one more drive. But if we can't make the 471 and we break the trend line, then we're definitely testing 46 or maybe even lower. And we talked about, there's structural support starting. Well, this line, this triangle that broke out to the upside, is one level, right? We kind of dipped into this back in October. And if you just draw a line there, you can see how I'm flashing this right there, that line that's already there. You can see how it Dow came and held it right on top of it. So if it's holding, you're right. So the Dow is stronger, and you can see how the S&P kind of slipped past those. Remember the actual structural support, we dipped deep into it, into the flesh of it, right? So those are weaker markets. So Dow's kind of holding it together for now. We'll have to continue to watch this, but Dow's exactly not in great shape either. Now that we took out that trend line, and we really took a dip below 47,000, so 47,162. Heck, we're at 46. I think the best case scenario would be for the Dow to sort of consolidate above 46,000, maybe 4640, right in this area. But if we take out Friday's low, start meandering down below 46,000, then we have 45,000. These are in somehow for some reason these are all in 1,000-point increments. So that's kind of we have I would say we have a little bit of a we have some open space. Yes, we have some structural support here, 47,174, 45,174. It's possible. I mean, you guys can figure that out. Just draw a line there. But if we're going to come there, this 44,000, 45, 44,873, this area is all in play. All right. So let's go watch for that. Remember, the Dow hasn't had a single counter trend bar in this entire move down. So it's totally possible that we go up and do a 1 or 2 or 1 day counter trend would be deadly. If we do 1, 2, or even a 3-day counter trend going up into this level, we're still not out of the woods. So it basically looks weak. I mean, all of it, talk about feast or famine. It looks like famine going into, it might be feast during Thanksgiving, but it just looks like unless we can hold these levels, it's just a weak market.
It could be a bear feast.
It could be a bear feast, definitely. Yep. Or pork roast. All right. So that's the Dow. I think that's coming from the October 22 low. So this 64,000 is a pretty solid support here. This is also 360 degrees up from that low. So if we're going to continue to slip, we could come down and score out here. That would be, well, it'll be Thanksgiving week if we continue to slip and square out. And that would be 360 by 810. Yep. All right. Normally I jump back and forth between the weeklies, but let's just jump to the weekly, take a look at that, and finish up the indices with the 30-minute. Here's a weekly continuation chart, the futures chart. And we talked about a correction here. Anything above 65.20 being sort of a let's just say a normal healthy correction, right? So basis the weekly. This is all very normal about 65.20. And we got pretty close to that. So my thinking is if we can hold above this, yes, markets are still weak, as we saw in the daily, but in the longer run, it's still okay. We might come down, after all, we only have 1 bar down, because last week was an inside bar. So it's just 1, and we can have another inside bar. Well, that just sets up the mystery for the first week of December. But being that we're only 1 week down, if the weekly actually turned at this square, which did square out, coming off the 2020 low, you can see the 2 dashed lines converging exactly where the open was in that bar right there. So long as we're above this, we're okay. Obviously in a weak position, but it's only really 1 bar down as I counted, because I don't really count the inside bars. So that would be 1 bar down. I keep saying that because what follows is 2, 3, 4 bars down. So And we're going to understand that if the 65.20 gets taken out, we can hold this, and we haven't even done a real counter trend, right? We're talking about counter trend bars. We haven't even done a swing, lower high in a swing. So we have a lot left to do here. And I think this is early. And I think keep watching this 65.20 basis the weekly will help us figure out how this is going to unfold. Meaning, is it going to be topsy-turvy, a little bit of, slowly, or if it's going to be, let's just say quickly. And that would be how fast we take out this 65.20. And if you remember, the 6,400 came up on the other chart, on the daily chart, remember? The 360. So the zone is important. So we could come down into here and still have good support, and we could do that in one more bar. So that'll still be only 2 weeks, 2 bars down, and that will be a minor correction. If you look at a move like this, if you look at all the other corrections we've had in the past, it's very little. It hasn't grown yet, but if we take out 65.20, I think we could be looking at much bigger things, much bigger themes, and much lower prices. Yeah, it took me all that time to just say that. That's what I was trying to get at. If that gets taken out, we have bigger things to deal with. Now, something similar is showing up on the cash. This is the cash weekly. And here, the really important level for the weekly would be the 64.43 to 37, this area. Again, this is 360 up from the, where is that coming from? 2009 lows. So it's a big deal. And as long as we're holding above it, I would say we can time this off as let's just say a healthy correction. And if the counter trends can't really make new highs and we start making lower highs, then 64.43 being taken out would definitely give us a bigger correction. Let's say something like like this, or in the 22. And Ben, I know you've been talking about lows, much lower lows coming. What, I can't remember which quarter you were talking about it. Maybe it was January.
No, the third, fourth quarter gets the serious lows next year.
Right. Okay.
Yeah.
So perhaps, we might find support here and bounce off, and then
Yeah,
climb
make
there.
highs in the first quarter potentially. Yeah. Yep.
So either way, now you guys know the key level to watch. No matter how much noise there is, watch the 64.43. This is for the weekly, right? Not the daily. Daily, we can be all kinds of other things happening, but on the weekly basis, this is really the level we want to watch to see if it can hold or not. And if it doesn't, then obviously, we have a stop here and we have another stop down here. And now we're talking in the 55, 56, right? So it's a bit of a drop. And the way to get there is to watch these levels. All right, so here's 30-minute that I post every day. Last week we talked about the 67.88, and I think Monday, if I remember correctly, we were bracketing 68.06. If we can, hold above it and take it out, we can go higher. Otherwise, if we can get stuck below 67.88, not great news. And taking out 67.70, will definitely open up the downside, which it did. And basically, the market bounced off of each support and gave out. Bounce, gave out, bounce, gave out. And did this big triangle between early part of the week. And I even said, watch out for the break, because this triangle might give a false break. And sure enough, we rallied up, boom, came right back through the apex. Pretty much even numbers on both sides. So, but the high this morning was great. Not this morning, yesterday, right? Yesterday, exactly at 67.88, and we have price and time there. But once that hit, that was it, reversed, and all the way back down to 65 is where I had the initial support. We came down there, a little bounce, started pushing lower. And the next level really is the 6,500 level and 65.17. And we got pretty close to it here early this morning, bounced up higher. You can see these 3 higher lows. So after 3 higher lows, we reverse, then the upside opens up. We were looking for a reversal anyway, because we had support. We had support here on a number of levels, including 50% of the square, right? And we were pretty close enough to the 65.17. And I said, if we take out 66.10, then, we're going to squeeze to the upside, which we did, all the way up to 66.80. That's where that 50% line is, and then we reversed. But what you notice is, we're holding above the 66.10 now, going into the close. So next week, I think if we're going to be stronger and a positive week right off the bat, we want to get above this 66.50, 52 level. We want to consolidate up here. So just remember that we want to consolidate up here, and then we can take a drive at 67 or even higher, all the way high as you want. And so you can see how the dailies and all these levels are starting to stack up, but now the 30-minute has to sort of follow through. Until we can get above 66.50, everything's a little bit dicey. Here's 66.25. So yeah, we'll watch 66.52 and 66.10. If you get below this, then the work isn't done. We could go back down to maybe even try the 65.17. But it looks like we did enough work here to me. I mean, the way I'm seeing this, if we get below 66.10, it's possible that we go back and do some, let's say, checking before we move higher. But if we can hold above, certainly we, hold above 66.10, 66.25, and manage 66.50, then I think we can have a nice Thanksgiving rally. That's what it looks like. I think that's it for the indices. Yeah, and we had the 4-hour that also more or less hit the target, and it looks exhausted. So I think a bounce probably is in the cards. All right, let's move on to bonds.
And bonds is so boring compared to what was going on in the equity
My God,
markets.
good thing, because otherwise we would be just bonkers, right?
Yeah.
But yeah, it's interesting how quiet it's been. And I think the more interesting thing is where it's been quiet, sitting right on top of 45-degree line level, and is rather looking bullish, I have to say. And we have this trend line that's catching up. By next week, we'll be, and look at this, let me lengthen it out a little bit. Right there, right? We're just flying above it. But the main thing is we're above the 45, very, very quietly consolidating. But to me, this is, we're in this big sideways, and we're trying to catch a piece here and there. And being up here is positive. So you guys already know you can play it from 116 and a half, 116.13 to 119 is sort of the range, right? So we're in this range for the last month or two. And what you can do is you can trade between the levels, so long as we're up here, above the 66.13 level. Obviously, you can take the shots to the long side, but if we take this out, then as we go on in time, when we take this out, we're also taking out the lower trend line. So now we got double the trouble. So let's see what happens there. Take a quick look at the weekly. Weekly, not so bullish. It's funny how the daily is holding about the 45, which looks kind of bullish, right? But the weekly is holding below the 144. But we've made some higher lows and kind of coiling up here. So it's possible that we break to the upside at some point for whatever reason. My opinion is that it won't, but the charts are saying, look, we're building up pressure. And if we break this trend line, there's a trend line here. Right? We can draw one from here too. If we break that to the upside, we have kind of a triangle going here. If we break to the upside, even if it's false, it could carry some weight. So that's possible if we can take out 144. Otherwise, obviously the triangle can break both either way, right? So it could break to the downside, and we have 114 to deal with if that goes lower. But for now, we're coiling very tightly, which is not bad news because there's a move coming. Kind of like in gold, how when gold moves. All right, let's take a look at crude. Crude is, well, I should just sort of group all the sideways markets together. Crude is pretty much the same thing, right? We had this sort of the low that we got last time, a couple of in October, and quick 1 3-day bounce, and now we're slowly selling off. So this is not entirely bearish, because a market like this could easily false break and run hard or run hard period from here. So that's if the timing is done. I'm not so sure if we're done finished with time, but we are getting closer. And I think the more sideways these huge energy markets go, the bigger the pop on the other end. Anything you want to add, Ben?
And for now, got to wait for it to make a move.
Yep, yep. And we talked about this all year basically. So the 66.82 level, 67 is a level on the weekly. So until we can get above that, there's no big bull market in crude. And I don't know if we can exactly have a big bear market in crude because we're already at 57. Um, so I'm thinking we're kind of stuck here for a little bit. Sure, we can go a little lower. But the lowers from here are going to be interesting. You really have to watch it because any one of them could be one of those commodity style flushes, and then we can reverse and run the other way. So we got to watch them closely. All right, let's take a look at gold. Gold, to see it, small triangle inside of a big triangle. Basically, we're just coiling. And, we've been saying through this entire bull market, gold loves to triangulate and break to the upside. So here we are, keep an
It's
eye
doing
on
the
it.
same thing it's been doing since after a big rally. It's just coiling.
Exactly. No big deep corrections, it's all mostly in time. So I would say, get the squares right. I would say to watch it closely. For now, pretty much like we've been talking for the last couple of weeks, 51, 41.50 to the upside. We got 39.69 to the downside. That's the square we're working with. And if you would draw a line right in the middle, let me just eyeball this. We're straddling the sort of straddling the quarter level and triangulating right in there. If you ignore the wicks, you can see a little triangle here. So this is probably getting ready to break out. I mean, how much more can gold tighten up? And if we can hold this trend line, we're probably going to break to the upside. So if you guys can catch that, if you're trading that actively,
Hmm.
great.
It's just not bearish. A
No,
huge run and it just pulls back one square and triangulates.
yeah, it's not exactly. Yeah, yeah. Hmm.
Now, if we take out 39.69 short term, you could say, yeah, that's bearish.
Yes, exactly. Or even, after a push like this above 41.50, we should manage to hold above, right? We didn't.
Hmm. Hmm.
So now so it has to either consolidate here or, you know, yep. I was going to say something there, but now it slipped my mind. I was looking at silver. All right, let's move on to silver. Is it triangulating? Well, kind of a triangle. If you take the lows and the last couple of few days this week, last couple of weeks highs. But it's much stronger. It's holding above the 50% level. It's 49.10. A little bit of a dip and recovery this week, but that's it's good. We talked about how much support it has on the structural support. So silver looks good. Watching this really carefully because if this 49.10 goes, it could be an early sign like, hey, we're all going to correct a little bit deeper before anything else. But as long as we're tight and tightly wound and hanging up in here, the third drive wouldn't be out of the question. So I'll just leave it at that. And we'll do all the three metal weeklies together. It'll be easier and save some time. And so copper holding about
Close.
496. Yeah, 496. Yeah, again, kind of like the bonds, sitting on top of the key level. And we did have resistance here. If we do a flush, support is, put a number there. Support is around 470. So that's the downside. Upside, we're kind of coiled at 517. 517, 518. So that's the upside. And the middle is really the 495, and we're holding above it. So all in all, net positive. So it's probably looks like a correction that's sort of consolidating, right? And we'll see how that works out. For that, let's take a look at the weeklies. Weekly gold, not a whole lot to add from last week. We have a very, very tight week. 41.31 to the upside. You can see this week we went up and tapped that. Could, test it. It's good. We want these places to be tested. And we're well above the 39.15. So it looks like, if I were to eyeball the quarter square, we more or less held above it this week. So okay, another case for the another case for the bullish scenario. And silver is just holding right near the 51.25, which is the upper square. And we already tested the 50%. Of course, we were looking for it to run up. It did. And it's possible we consolidate up here, but nothing, it's perfectly normal. I say above 48 and a quarter, it's actually very strong. Yes, we squared and, we have to take a little break. So maybe that's what we're burning through time just to get that done. And gold is showing that in the form of a triangle, so which is bullish. So, you can see the bullishness is showing in silver in a little bit of a different way. Copper, holding about 480, very bullish, triangulating also. It wouldn't be too difficult to break to the upside of this triangle. And of course, until we can get above 535, not super strong, but it's doing pretty well above 480. Yeah. Do you have anything to add to the metal parade? They're
Oh,
all kind of
and
holding their bullish position, right?
yeah, bullish consolidations, bullish
Mhm.
triangles. So let it play out.
Yep.
I think they're all burning time, like you were saying.
hmm I mean, that's the classic, right? That between that and gold. Okay, let's look at Bitcoin for the record. Between all the shows, we've called this high, that high, and now this low. There we go. Ben, what do you think of that? I'm thinking, looking at the structural support and the squares, this looks like, and the geometry is there, in the form of the circle. I think we have a good chance of getting a low between 79 and this 83. Well, before we talked about the 103, then we have 97. We talked about 90 being pretty good support, and I remember saying if 90 goes, then we're going to be around 83, 84. So we got down to 80, 80, right? And I was looking at this structural support, say, well, if 90 goes, we're going to come down and test the structural support down in here somewhere around 80, 80, maybe I said 82, I can't remember. But anyway, I was looking at this cluster, and all this started with me saying, well, this low has to be taken out before we do anything. And of course, we took it out. And the fact that the reversal was missing was the first sign, right? Once that was missing and we had an inside bar, boom, the rest was easy peasy. So now the big question is, my God, we're just waterfalling. What's the story? So, the real story is that if the market wants a little bit of a bounce here, this is a great place to do it. We have good support. We have squares. So I'm calling it a low at least for a bounce. Let's see what we do. And so what's the opposite of that? Opposite of that is if we take out Friday's low, I don't think it's going to stop at say 79 or 80. So it's bad news, right? I mean, we'll have to at least take out 74, then structural support is coming way down, 80, 68. I don't even want to say these numbers, but yes, we could do that if this doesn't hold. And that's been the case so far, right? We talk about that not holding, this not holding. So if one of these levels doesn't hold, it doesn't mean it's going to go a couple of ticks below and reverse. These are, when major levels go, everything sort of gives out. And so here it's very good. Technically, it's there square wise and structurally we have some support. Yeah, we dug in a little deeper, but okay, we can say it's a weaker market. But we have to hold in this. If you can hold between, let's say 80 and 79, 90, 80 and 83, I think we have a shot at some kind of a bounce. And if we take out this down sloping line, I would say then a change in trend is probably confirmed, right? And we can have a little bit of a bounce before anything else. So that's my Bitcoin call. Ben, what do you think of that? Calling out the low.
That's a good call. Well, I'll show you some. I'll show you some
Do you have
stuff on.
something to match to
Yeah,
support that?
yeah,
Oh
not.
man,
Yeah, yeah.
you do?
We'll take a look. We'll see.
All right, that'd be great. All right, moving on to the dollar. Well, just when you think everybody thinks it's over for the dollar, it just whips around. And that's what we've been saying. The dollar is in good shape. We talked about we need to get above 99.50 to get the momentum revved up. And sure enough, we did. We went up all the way from, through the entire range. So the upper side is um, right at par, 150. So 50 cents. So we've got to almost there. And I would say dollar's bullish. There's no two ways about it. I'm going to lower the trend line. So that's the trend line to hold. And if we can hold about 99.50 next week, great. If we can take out the square, really, we need to take out 101. If we take out 101, we got this ABCD that's possibly getting taken out. That would set up a whole nother, this kind of a bottom, look at this bottom, Ben. This could lead to some crazy bull market here, crazy kind of a
Could
burn
be
to
a
the
big
upside,
move
right?
because you're
So,
talking about a 6-month bottom.
absolutely. And,
Mhm.
and we've been calling out these lows and how we get a flush here and blah, blah, blah. Yeah, it's boring when you look at it every week. It's not doing much, but if you notice every week, we're making, higher highs and higher lows. So, if we can kind of stabilize here and start moving, we could really catch some momentum to the upside. All right, let me do the euro and then we'll look at both charts at once. Euro couldn't hold 1650. Last week I talked about the 1650. We have to settle above that. And I just couldn't believe that we could.
I mean, you've been
And
all over that number for a while, and man, is that a good level for
it's a
the
good level
euro.
to go off of. Yep. And we basically came back down to back to the old low early November. So now that really the target is, if we can take this out, if we take this out, this is going to be big. It's going to go. And if that goes, the dollar's going to go. So everything's setting up here for a nice trend in the currencies. So you guys, heads up. When things are trending, it's easy money. So get them when you can, right? Instead of struggling when nothing's moving. And the weekly chart just shows up. We only had a 1 bar correction the week before. We talked about, 1 or 2 week correction wouldn't be bad. And last week we talked about we said, we have a little bit of a correction starting. Okay, great. So we had 1 bar down and back on up and a very strong back up. So like I said, if the daily can sort of hold its own, then we're in pretty good shape. Here's the weekly, 1654. You can see the weekly. What a beautiful setup, right? From the high here, we went to 2/3 of the square, and I mean that was clearly a false break. I couldn't even believe we were able to get up that high. We did, but I mean, look at us now, right? So we might be back to this 110 level before we know it, and that would be sort of a normal correction if you want to think of it that way. And but if we get down here again, we're not seeing this 120 again, this area. Boy, I have a lot of attitude when I talk about the euro. I don't know why. This is a 4-hour Bitcoin. I don't know why it popped up. It was the next screen, I guess. And well, we're winding down. Oh, what I wanted to show you was if you look at this equilibrium line, how we pushed past it. So sometimes that's a sign of exhaustion. So we'll see if that's what's settling in, if it is or not. We'll find out soon. But you guys have all the levels. All right, Ben, I took way too long. I don't know why. It's one of those weeks, Let me put it back to you because you got a
It
lot
was
to cover.
it was a big week, and I could see why. It took a
Yeah,
while, a
yeah,
lot to cover.
yeah, yeah. Let's go look at all the good stuff. Man, do we know how to put the support levels or what?
Yep.
It's
Let's talk about this one. So we we drew this in about 3 or 4 weeks ago,
yep, yep, yep.
when we were, messing around up here and figuring out, are we gonna hold this 25,720 level, or we saw what happened. The story is, we lost it, tested it, and then
Lost
we
it.
knew, yep, and then we knew the half square was the next spot, and of course it dipped into this support zone.
hmm
But notice we closed over the half square.
Right, right, right. Good point.
So this coming week, Thanksgiving week, this 24,263 is really important to watch. I mean, we could crisscross it, most likely that's what's going to happen as we probe. But if we start getting, daily bars above it, then we could, see a big move. So,
Mm-hmm.
daily bars above it, then we could see a big move. So, daily bars above it, then we could see a big move. So, daily bars above it, then we could see a big move. So, daily bars above it, then we could see a big move. So, daily bars above it, then we could see a big move. So, daily bars above it, then we could see a big move. So, daily bars above it, then we could see a big move. So, daily bars above it, then we could see a big move. So, daily bars above it, then we could see a big move. So, daily bars above it, then we could see a big move. So, daily bars above it, then we could see a big move. So, daily bars above it, then we could see a big move. So, daily bars above it, then we could see a big move. So, daily bars above it, then we could see a big move. So, daily bars above it, then we could see a big move. So, daily bars above it, then we could see a big m then the correction, sort of the counter trend's going to be on, and we're going to watch and see, how many days is the counter trend, how many, how steep is it, the rally. But this was an area that we were watching, and we sure came in and tested it
That was
this
your
week.
ABCD, right? Wasn't there ABC target somewhere down there
Yeah, there
that
is one
you
that goes into there.
or
It's
a
a, it
little
was,
above it or something?
I think, yeah, it was a little short of it right there.
Oh, yep, yep.
So it was close. But
Hmm.
I mean, the key thing is we came down, we tested this structural support
Yeah, yep.
in this, 24.2 to 23.9. And you'll see when we
Hmm.
look at the bigger time frames why this area is important too. So successful test. Now we got to see, how does it deal with this 50% of the square? We'll watch that this in the coming week. I wanted to show you the calendar chart just to show you where the low came in here because this is really interesting.
Oh,
Look at
wow.
the
Yeah.
one by one off of the April low. Look at where that,
Hmm.
and
That's
that's
pretty
not
good.
that's not by chance. That's a square out, right? Because that's price and
Well,
time right
not only
there.
square, but the real deal is if that low gets taken out, it's pretty bad. So that's the
Yes.
biggest thing here.
Yep.
You know?
And again, here you can see why we found support. There's structural support here. You have the one
Geometry
by
in there.
one. Yep,
Hmm.
you got geometry, so everything's there. Counter trends we want to watch. Do we stay below this 24,975? But I
Very
thought this
nice.
was this was worth seeing
Hmm.
where that came in. All right, let's check the weekly. And you can see why this support zone is pretty important. And this is a weekly off of the uh, COVID lows.
Wow, look at that.
Yeah, we squared out at the high, right, which we talked about weeks ago, and we've
Right,
had, three down bars right into support.
right.
So now we're going to be really eyeballing this level. Let's call it 24,000, just rounding. Can we stay above it? Can we stay above it in the next few weeks and chop around? Because if we get stuck under, that means it opens up, the next 50% of the square, which is 21,000. So this is a really important low for control of this weekly trend. Because remember, if we come down here, this was just basically a good structural check back, and it could be bullish and conceivably could go to, new all-time highs. But we'll see. We know the
Hmm.
level. The level got tested this week. Let's see what happens in the coming weeks.
Yep.
Let's take a quick look at the monthly. Same
Oh
story on the
boy.
monthly, but this is
Hmm.
from the '02, the .com lows, right? So different
Boy.
starting point,
Hmm.
same spot. Tested it, right? Now we do have a down bar this month, and it looks like, we'll have a down bar this month. So do we make a lower low next month? And importantly, will it be below that 24, that would make it below that 24,000. So that is really, really key level for the NASDAQ. And you can see it on a daily, on a weekly, on a monthly. So it is the level to watch. It is the level to hold if there is more run in the bull left. And I can say that, without equivocation. That is the spot. So we know where to watch. Anything to add on these longer term charts? I know you covered the daily on the weekly or the
Hmm.
monthly. Any comments?
Well, I think they're showing us the potential downside if this little correction gets out of hand, you know.
Hmm.
And they all start with a little bit of a square here on the daily, and then the pattern starts to loosen up, and all kinds of things happen. And I think, yeah, watch the dailies very closely because it's where you can see how critical these lows are. You know,
Really, really important.
really
And
critical.
and I think your point is great. And I talk about that when I go through the commodities, how, you start at the daily, and then the pattern starts filtering through into the weekly, into the monthly, and then when they all line up, you get the big moves.
Right.
So in reverse, we're watching that here to see what
Yeah. Yeah.
happens.
Mm.
All right, let's go look at Bitcoin. A little different view than yours, but I think the similar result. So here's the daily,
Mhm.
and we've been following the story. As we get stuck below each level, the story changes, and then we get stuck here. And now this 85,151 is key daily basis, right? We need to get back above here that we've pushed through, right? And this could be, a stop hunt, sort of the washout type thing. And we could get the bottom that Barry's talking about because we do have this structural support here, previous lows and previous consolidation. But we got to get above 85. We got to start printing bars above here and then we can build back up again. Because if we start printing bars under and getting stuck, this is what happens, right? You filter down to the next level, which is 73.5.
But the buyers here, February, March, April buyers need to be sort of spooked first, I think, before you do anything. I mean,
Yeah.
right now, I mean, everybody over here is feeling the heat, right?
I mean, I would agree that these people, we probably need to take out these stops to freak them out.
Well, you do have a little buffer down there. That was just for April, but heck, it could work out. It could work out for now if you just stretch it
Yeah.
out.
Yeah. I mean, if you look,
That thing.
it's
Yeah.
yeah, it's coming, it's covering all these highs over here. So yeah, I
Hmm.
will stretch that out and give everybody a look at that next
Hmm.
week.
Nice
Now let's
chart.
look. Now let's look at the bigger time frames because they show an interesting picture. So here's the weekly, and this one's really been getting the vibrations well, and it's off the stock market lows in 22. No, this was November of 22. We put in a
Hmm.
low on Bitcoin a little bit
Yep.
after the stock market. This berry is a perfect 1 by 2. And look how it picked up the low off of here. So that's where I was saying this could be the low,
Yeah. Yeah.
right? And this is weekly, right? This is weekly. This
Hmm.
is a weekly square out right there at the low,
Hmm.
price and time together right there. But again, we have markers on the daily. We got to get above 85. On the weekly, we got to get above 89.
Yep. Yep.
If we can get up here, then again we can head back to the hundreds of thousands. But this square out here, this price and time marker on the 1 by 2 is um is saying there's a good shot we got a low right there. Right.
Mhm.
And again, it's the same thing you talked about. So if we take out that low, we know we're going a lot further. And here would be we're heading down to 70, to check all this here. Let's look at an ugly bar on the monthly.
Yeah, boy. Yeah. That's
That
about
that's about as ugly as it gets.
that's fugly.
Yeah, yes, right. But like we talked about, the key thing, right? This is why we use the squares. We knew when we got stuck under here that things weren't good because
Yeah.
for 6 months we were stuck under here as we are trying to pierce through. Then we got through, came back, got through, came back, got through, came back, and really struggled, and then gave it up.
Do you remember me saying, "Hey, that looks like distribution," and we laughed like, "Hey, does it even happen in Bitcoin?" But of course it
Yeah,
does, right?
of course. Yeah, I do
And
remember. Yeah. And that's the thing about the squares is it sort of takes the
mhm.
novelty out of it. Doesn't care if it's Nvidia or a gold miner or Bitcoin or some robotics company or the greatest AI in the world. The charts don't lie. The squares tell you where the probabilities lie. And when we got stuck under here, you can go back and check the other videos. We were saying probabilities are we're going down to 93. Then when we get below 93, probabilities we're going to 74. So monthly basis, we need to get above 93.
Mhm.
And so those are the different important targets that we want to watch to see, where do the odds shift. Obviously, the daily goes first at 85, then it filters into the weekly at 89, and then finally the monthly at 93. So we watch Bitcoin. Right now, we're cautious based on that 1 by 2 trend line hit. There's a good possibility that the low's in, but let's see if we can get above 85 first, because that's the first marker. Anything else to add here on Bitcoin?
No, we're good. Good.
Okay. We've got 3 commodities to cover today. The grains are still correcting, still like them longer term. They're correcting, so there's not much to look at there. In the softs, we've got 2 to look at, sugar and coffee. So let's start off with sugar. And the reason I was highlighting sugar is we've had this first push up, and look at all that they could do on the correction, Barry.
Hmm.
It's basically been sideways with a little drift, but it's sloppy, but it's structurally bullish. right?
Yep. Yes.
Because we're testing this high here, piercing into it a little bit. It just looks like it's building up for the next push higher. And I drew this little channel, if you could draw it on your charts, if we pop through that, then we're going. And then we'll come up to 1561 will be the next test at 50% of the square and this structural resistance. But it looks good. I mean, the correction is very shallow. It's more of a time correction than it is price so far. Here's your weekly. Had an inside week, obviously, which is what sideways is inside. And the after last week's up bar, we've just been basically inside the upper half of the bar with the low sitting on the previous highs of that down bar. So it's resting and getting ready to go, which is why I want you guys to watch it this week. Watch for that, rectangle breakout. Here's the monthly. Haven't filtered into there yet. This is the current month's bar where we made the low, but we're in the top part of the range with about a week to go in trading. So let's see if we can close right near the highs, and that'll give us a good chance to set a higher high for the month of December. So it's correcting, but correcting in a very bullish manner. So let's watch it this week. Take out these highs here. We could have a nice run in sugar. Anything else you want to add on sugar?
Well, we got to watch it closely and start taking the shots, and,
Yep,
and hopefully we can make it above that 1560, 1550 area,
that's
you
right.
know.
And we settle on that, then we get a really good run.
Yep. Yep.
All right, let's take a look at the gift that keeps on giving, which is coffee.
Giving and taking, but
Yes. I mean, we've been looking for the short here, and we keep seeing weakness, right?
yeah, yeah.
We last week we said we want to see, start getting closes under this 380. Yesterday closed under 380. Tuesday closed under 380. Today closed under 380. We
Mhm.
did get a rally up off the low. It was a gap down, and they rallied. So I don't know if it was just, the normal games that they're playing, or if this is going to mean something. But we know what to watch here. We know we got to watch that 380.
Well, we took out the trend line.
We took out the trend line.
Mhm.
Now we got to take out this low here, and then we head down to, the
All
the
right.
full square here at 335, where you can see there's structural support there too.
I mean, the good news is we got lower lows and lower highs in spades. So,
Yep, we had the false break at the high, and now we're just seeing weakness coming in because of the lower lows and lower highs. Yep. All right, let's look at the weekly. Here's your weekly. So we had a down week. We pierced this full square, didn't close below it, but we did close below 384. So what we're watching to see if we can get a full square, a full bar below this square of 358, then we're off to 330. But the weakness is there, right? We had the high, had a down bar, had one up bar, and now we're down again. So it was a one week counter trend we saw there. And then here's the monthly. Again, the last one is will filter to will be the monthly. But here this is the up bar where the false break was. We had timing there, and we've got a monthly reversal so far. Key thing this week is we closed under 380. So we're going to get more bars under this 380, and the more bars we get under here, the more pressure will be pushing down to 335. Anything to add here on coffee?
no, we're good. I think everything's in place.
Yep. Just keep selling the spikes as long as they're lower highs.
Hmm.
All right, let's go to the last one, which has been a stellar performer, NatGas. I mean, see, remember how boring this thing was for so long?
Yep.
Sideways, sideways, sideways. And then once we started and we started calling it out, hey, there's higher lows and higher highs coming in here.
Hmm.
And we're headed, believe it or not, we're headed up to 490.
Hmm. You mean five?
$5. Yeah. Yep. So we
Yeah.
pulled back.
Wow.
We pulled back right to the half square, couldn't get below it, tried, and then we rally again. So
Wow. Yeah.
heading
Funny
to
how
four.
crude is going lower and Natty is going under some kind of a bull run here.
Yeah. Yep. I mean, wait till you see the weekly and the monthly. They're attacking like important spots.
Oh, wow. Wow.
Talked about this last week, right? This
Hmm.
471 area, super important.
Yep.
Got to close over it. I mean, it's just over it, but that gives us a possibility next week of getting full bars over here. And then that opens up 567, the full square. And we could take out this high, this high from early this year.
Then we fly.
Then, yeah, then we've got, a series of higher highs and higher lows, weekly basis. So it's shaping up.
Yep.
See how
Yep.
it filters into the higher time frames?
Mhm.
Lastly, let's look at the monthly. Let's see what it's attacking. Oh, look
Oh
at that.
boy. Look at that.
50% of the square. See how important this is?
Hmm.
Topped it here, topped it here, topped it here, topped it here, bottomed it here, bottomed it here. So this is a critical spot. If we get above 488, we're going.
Oh boy.
We're really going. So watch 488 this week, monthly basis. That's super important. Weekly basis, watch 471. And on the daily, it's 490.
Very good.
So Natty is doing nice for us. We give thanks for Nat Gas.
Definitely. Makes up for a lot of waiting around for energies to move, right?
Yeah, it does. I mean, and it pays. It's why you watch, even though markets go sideways, you watch them because you're looking for these early clues that get you involved when the risk is lower, right? Because
Absolutely.
if it stops you out, it's not a killer. Now, if it stops you out, it hurts, right?
Yeah.
It hurts.
Well, wait till we get
So
above five.
yeah, yeah, yep. So anyway, I want to wish everybody a happy Thanksgiving. I don't think we're going to record next week, right, Barry? I mean, too much going on with the holiday. Maybe on Friday. I don't know.
Yeah, I don't think I'll be traveling, so yeah,
Okay. Yeah.
we'll just do
So
one later.
yeah. So we'll just wish everybody a happy Thanksgiving. Enjoy the turkey. Enjoy the meal, and enjoy the volatility because it's going to be here through Thanksgiving, probably through Christmas. So enjoy it, and we'll talk to you in 2 weeks.
All right. Good job, Ben. And you guys have a great week and happy Thanksgiving. Lots of things to give thanks to, actually. So,
Yes.
yep. So rest up and we'll see you soon.
Take care,
Take care.
everybody.
Bye
Bye
bye.
bye.